It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. It's you and I. Welcome back to another episode of Trading Stocks Made Easy. It's Tyrone Jackson. Do you like me? Do you love me? Okay, well, you're going to love this episode. Hey, on this episode of Trading Stocks Made Easy, we're going to talk about your money, your wealth, and taxes. Now, I just want to say at the onset of this episode that I am not a tax specialist. I am an expert trader and wealth coach, but I am not a tax specialist. So anything that I discuss in this particular episode should not be taken as advice. It is educational information and things you simply should know about. Okay? All right. So with that said, I do suggest that if you hear anything that's interesting to you, you should ask your tax preparer about its applicability to your circumstances. That way you can plan with a little bit better skill set in mind. All right, here we go. So we all know by now, if you've been listening to this podcast for over a year, that there is money to be made in the stock market. It's not just about money to be made. It's about generating residual income. Well, guess what happens when you generate $5,000, $6,000, $7,000, or even $10,000 a month in residual income, selling covered calls, volatility trading, and collecting dividends? When that happens, you actually owe taxes. Yes, your Uncle Sam, remember that? Yes, for every dollar you generate on a trade, some of it goes to the United States government in the form of taxes. There's also an additional tax to your local state government, and your accountant can tell you about that. So I can help you make money in the market, and we know there's money to be made in the market when the markets go up, bullish, go down, bearish, or the market is neutral. And the way that we do that in the Wealthy Investor Program is we become experts at covered calls in the money, at the money, and out of the money. Now, once you start this process going in what we refer to as your cash account, that account that you're actively trading in, and you're generating that money, you have to learn something about your tax liability because trading produces income. Now, listen to me carefully here. I hope you have your hat of openness on and you're willing to learn something new that you never knew before or revisit an issue and see it from a different perspective. So don't be negative, just be open, and maybe you're about to get more of that financial education for free. Okay, so here we go. So if I generate $10,000 in tradable profits this month, a portion of that money goes to my taxes that I owe as a citizen of the United States. So people often say to me, Tyrone, if I generated $10,000 using your method this month, what should I do about taxes? Well, there's two ways to address your taxes from your trading profits. Number one is add up your profits for the month inside what is hopefully your TD Ameritrade account. You can use GainsKeeper in there to tell you what you've actually earned this month. And the money that you've actually earned is what's known as realized gains. So let me explain the difference between unrealized and realized gains. Let's say, for example, I bought Disney stock 3 years ago at $70 a share. It's at $100 a share right now. Do I have a profit on those shares? Yes, but they're unrealized, right? They're basically paper profits because I haven't sold the stock. Well, when there's unrealized gains, there's zero tax liability. However, when you're covered call writing, you are actually generating income and realized gains. Now, here's something that most people don't know. Do you realize that realized gains from something like the stock market is taxed at a lower rate than your weekly salary? Isn't that interesting? Why would the Congress of the United States tax stock market profits at a lower rate than what's known as your earned income? You see, because most people who engage in actively generating earned income are trading time for dollars. Do you get that? But people who are generating income from investment income are usually of a different ilk, of a higher socioeconomic status. And since those people vote, they get to pay lower taxes on their unearned income. Do you get that? Okay, so you may make $5,000 or $10,000 a month at your job. That $5,000 or $10,000 a month, that earned income, is taxed at a higher rate than the money that you generate from covered call writing. Why? Well, you better watch who you vote for because they make the rules. And this is another reason why the rich get richer, because they have some basic understanding of what stream of income is taxed at what rate. Now, when I tell you that your investment income is taxed at a lower rate, it's not radically lower, and that rate changes year to year. See, most people don't realize that income tax law is constantly fluctuating every 52 weeks. Congress is always looking at where the revenue comes from so they can get their share. Okay? So people who hold stocks, for example, for 5, 6, or 7 years, guess what? They are growing wealth, and that wealth is growing tax-free or tax-deferred, depending upon how you want to look at it. And what I mean is tax-deferred, meaning if I bought Disney stock 15 years ago and I haven't sold my shares, there are no taxes on my shares until they are sold. Now, under the tax code, there's something else you should know about. And by the way, I'm referring to U.S. tax law, not tax law in Canada. It's a lot different. But in the U.S. tax code, there's a different tax on long-term capital gains versus short-term capital gains. So let me explain. If you're a trader who's in and out of stocks all the time, you pay a different tax rate. In fact, it's a higher tax rate than the person who holds stocks for a year or more. When you're jumping in and out of stocks, just so you know, you're paying short-term capital gains. Short-term capital gains is higher than long-term capital gains. So what this means is when you really get into this trading thing, you can have a tax strategy. So if you're a six-figure trader, someone who makes $100,000 or more trading in the stock market, you may want to assess the activity around your short-term trades and take those profits and invest them for the long term so that when you sell your stocks for the longer term, they are taxed at a lower rate. Did you know that? See, this is where when we have the right belief systems about money, money becomes a lot of fun because you can actually design a tax strategy that allows you to grow wealth in the long term at a lower tax rate, trade and take in short-term income, but you have to speak to a professional about that. Does that make sense? Okay. So the wealthiest people in our country, do you think they pay a higher or lower tax rate on their short-term capital gains? I'll give you a second. All right, this is like a game show. Here we go. You want the answer? The answer is they pay lower tax rates. Why? Because wealthy people understand the benefits of exploiting taxation in a personal versus a corporate account. Ooh, here's where the game gets interestinger and interestinger. Should you be trading right now in your personal trading account or in a corporation that you create? More on that right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
So in this episode, we're talking about your money, your taxation, and your wealth. All right, so right before the break, I was talking to you about this idea of tax planning once you've done 1 or 2 years of stock trading. Now, what a lot of people do once they become a 6-figure trader is they will set up a corporation. A corporation is a separate body, a separate entity outside of your name, and it has a separate bank account and a separate what they call EIN. And the EIN for your corporation is like your company's social security number, right? Your company can engage in a lot of things that makes profit. Did you know that trading stocks can be one of them? This is news to a lot of people. That, wait a minute, I could be trading stocks from home in my corporation's name, and that's how my corporation generates money? It sure is. Now, your corporation has certain obligations, and it may be to pay you a salary. So once you begin trading at the 6-figure level and you have a corporation, the profits that come in to your corporate account can be written off as a salary for you, the business owner. So can the cost of your computer, your cell phone, or any other item that is specifically engaged in the ability to generate revenue. So there are 7-figure traders who trade in a variety of different accounts. Why? Because they can write off the cost of not only trading itself, but all the equipment necessary to pursue trading for income. There are more advantages the higher up you go to trading in a corporate tax account, right? But it's hard for me to teach you all of that if what? If you don't have the mindset for wealth already. Now, since corporate tax law also changes on an annual basis, you have to work with a tax professional to determine right now if you should be trading in a corporation or continue to trade in your name. Now, let me help you out because this stuff gets a little complicated. If you are trading right now, as I know many of you are, and you're earning less than $100,000, continue to trade in your name. It's simply not worth the extra risk, responsibilities of having to keep 2 sets of books in your name and in your company's name. However, if you've been trading for more than 2 years, particularly using the wealthy investor approach to the stock market, and you're earning over $100,000 or more, you may want to talk to your tax professional about setting up a separate corporation because there are larger tax advantages than you would get than if you were trading in your individual name. This is where wealth building becomes a lot of fun, but also a greater responsibility. So when we look at some of the wealthiest people in the world, did you know that they have 50 corporations that have different objectives? Some corporations hold real estate. Some corporations hold stocks for the long term. Some corporations are designed to collect 6 figures in dividends. And so to ensure the fact that they're paying a lower tax bill, they create a different corporation with a different objective. Now, that's very, very, very advanced. I can tell you some of the deductions that might be in your corporation against your stock market earnings could be things like health insurance, right? It could be computers, as I mentioned before. It can even be transportation, and it can be seminars that you attend that teach you how to make more money in your life, right? So, really, when you become an educated investor and trader, a whole world opens up to you, like the world I'm opening up to you right now of taxes and tax deductibility. So if you feel that you have what it takes to be a successful trader in the stock market, my question to you is, are you ready to be rich? Because when you have financial freedom, there is also tax liability and how you want to treat your short-term and long-term gains in the stock market. Now, I also want to share some other ideas with you. Always be responsible when it comes to tax bills. You never really want to fall behind and have to deal with the IRS because it is very, very stressful. And I've had my share of stress throughout my 22 years of trading. And when you start trading above the 6-figure level, you have to be a very good record keeper. So at some point, not only do you want to have an expert tax preparer, you may want to have an assistant who keeps you organized. And if you have an assistant and you're trading in a corporation, your assistant's salary is what? Tax deductible. So there are a lot of advantages to understanding just the basics of tax deductibility and general, and I mean general, corporate tax law. But that's how the rich stay rich. So if you're enthusiastically thinking about your future, you're going to have to work with a tax professional. And I don't mean someone who just works in some small office that's set up January through May. You need somebody who handles taxes all year around, because corporations can pay something called quarterly taxes, and you really need a preparer to do that. So what a lot of people do is they say, hey, I'm down to totally make all this money in the stock market, but I don't want any of the risk, and I certainly don't want any of the responsibility that goes along with keeping all these records. I just want the lifestyle. And that is the wrong way to think about it. The more wealth you have, the more responsibilities you take on. But the good news is, the more people there are to help you with that. All right. So think about your future. Think about what you'd really want to happen. Create a financial vision for yourself. And your job within the next 30 days is to introduce yourself or get to know a tax preparer that can help you along the way in the journey. I'm happy to help you with all the trades that make money, but it is your job and your responsibility to keep your records and stay up on your personal and corporate taxes. You have a lot to look forward to. Stick with me, Tyrone Jackson, the Wealthy Investor, and I'll show you how to do it. See you next week.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.